Hello, everyone. Good morning, ladies and gentlemen. Let's confirm we're all on the same page. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this started. So let's see. Let's confirm we're all good. So, all right, what's happening in the comment section? Oh, innocent babe, good morning to you. Missed you yesterday. How are you? How are you doing? Okay, Moria Asmin, good morning. 559, good morning to you. Muhammad Afan, good morning. 166, good morning. 559, Elias GP. All right. Oh, thank you, Carrie. Good morning to you as well. Oh, beautiful. Innocent babe. Okay. All right, glad to hear you're good. I'm very well, thank you. I think we are good to go this morning. So, I welcome you once again to yet another promising session on Extra and Speed Live, hosted by my humble self, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. And well, before we kickstart the session, definitely we are going to be looking at all the pairs we deliberated on yesterday. So we are going to be looking at how well these pairs are doing, and then if there are any development or any decision we are going to be making on this pair, I will be sharing during the course of the session. So I will advise you to stay tuned in so that you don't miss out on any of these advices that I will be dishing out during the course of the session. And that reminds me, if you have any pair you want us to look at, be it commodity, options, cryptocurrency, currency pairs, whatever it is, let me know and I will be using my technical skills to identify trading opportunities for us during the New York session today. So drop it in the comment section and I will try to incorporate it into my plans for today. So without further ado, let's dive into the chart and let's see what is going on in the market as at this morning. And as usual, the first pair we are going to be looking at is the US oil. And on the US oil, we are quite profitable at this point in time. And the first thing I'll be saying at this juncture is that we should be moving our stop loss to lock in some profit at this point in time. So with that being said, let's quickly run through the daily time frame. Let's have a holistic view of what is really happening in the market. Then we'll come back here on the 1 hour time frame to make a decision for today. So scaling up to the daily time frame on the US oil, remember we had this scenario where we saw price action um, on a bullish momentum in the last 2 years, and as a result of that, we were able to connect the series of higher lows here to give us that resultant bullish trend line that you can see on your screen with the green color. And if we zoom into what has been happening in the last 3 months, it's quite interesting. We have a structure, a very simple structure that we could play around with to take advantage of any trading opportunity. So as at yesterday, we were able to identify this important key level at the $1,680, sorry, the $86 level. And remember I told you last week that this level has been a major determinant of price action, at least in the last 1 year now. Look at what happened around this level during the later part of last year. We saw how sellers gathered around this level to sell the US oil, and then during the early month of this year, we saw the final breakout of that structure, which led price to the highest point at around the $1,130 level. And in the last couple of months now, I mean since the month of August, we saw that price collapse right back into that key level. So we saw the first attempt by buyers to push price to the upside here, and then we saw price come back again into this level. So we saw the breakdown of that structure. Price broke above that structure during I think 3 weeks ago when the OPEC Plus had their meeting, when they made a decision to um, cut oil production by 2 million barrels per day. So we saw this impulsive move that broke out of that structure as well. And in addition to the $86 level that we identified here is this bearish trend line. After connecting the series of lower highs here since the month of June, we had this bearish trend line as well that pushed price right into the structure. So we had the breakout of that structure 3 weeks ago. We had a breakout of the key level. We had the breakout of the bearish trend line, giving us a bullish signal at that point in time. And after considering that impulsive move to the upside here, that led price into the $96 area. So we saw this move breaking out of that structure. We expected that price is likely going to come back and do a retest of structure. This is from a technical standpoint anyway. So we expect that price will come back, and price actually did that during the course of last week trading session. And since then, price has been caught within a consolidation phase around here, hereby emphasizing the indecision had in the market at this point in time. So price has been trading right around, let me zoom in so that we can see this clearly. So price has been consolidating right within the $82 level and the $86 area. And the most important thing at this point is this $86 level. And as we can see, price has been trading right below that structure in the last 1 week. So going into this week, I was actually looking forward to a bullish momentum. And the bullish momentum we were actually looking forward to is only going to happen if we sight a breakout of that $86 level. I want to see a significant breakout of that structure, a retest of that level to give us further confirmation of a trend continuation to the upside. However, when we scale down to the 1 hour time frame to see what is really happening around this area and to identify how the participants in this market are actually relating with that structure right below the $86 level, what we saw in the 1 hour time frame was quite different. So let's zoom down to the 1 hour time frame and let's look at what we identified here. So when we zoom down to the 1 hour time frame, the first thing we observed was that there was an initial bullish momentum. Price started the week at around the $85 level. So we saw this move. Price climbed up to this highest point it got to this week at the $86 mark. And immediately price tested the $86 level. What did we see? We saw an impulsive move to the downside. We saw a bearish momentum to the downside, which gave us a signal that this week is likely going to be on a bearish tone. So we waited for the retest of structure. Price came back to do a retest of structure during the New York session yesterday. And since then, price has been doing multiple rejection of that channel between the 85 and the $86 level to incite a bearish momentum to the downside. So in that regard, we were able to take advantage of that bearish move as price moved to the downside on the USOil. So in the last 24 hours now, we have witnessed a continued rejection of the $84.50 level. So remember, as at yesterday, we identified the key level at $84.50, and I said that if price continue to trade right below that level, we want to be taking advantage of a sell position. And that's exactly what has happened. So as we can see right now, we are in about, let me see how many pips in profit at the moment. We are in about 160 pips in profit at this point. Now that we have a profit already, what we want to be doing next is to lock into profit. We want to move our stop loss to either break even. Excuse me. I'm having a little cold this morning, so don't mind my voice. So we are moving our stop loss to either break even or lock in some profit somewhere right around the $84 mark at this point in time, as we don't know how this is going to go out as we head into the New York session. But one thing we'll observe here on the 1 hour time frame is a situation where price has been rejecting the $82 area. I think the $82.30 to $82 $0.50 area. I think so. I think okay, between the $82.30 and the $83 level, we can see that price has been rejecting that level. So what I'll be doing here is to identify this level as a temporary demand zone, and let's label this point. So we have a temporary demand zone here. As we can see, since yesterday, price has consistently rejected that level. So we've been seeing buying pressure from this area. You saw one here, and right now price is right around that level. So for those who had missed out on the selling opportunity we took advantage of right below the $84.50 yesterday, well, are we going to be having a situation where the market is going to give us a second chance to join this bearish move? Well, if we are going to be seeing a bearish move from this point, what I'll be suggesting I'll be suggesting is that we remain patient and let's see a situation where price breaks down this demand zone. That is, we see a situation where price takes out all the buy position here to give us a bearish signal. And immediately we identify a bearish signal at this point. Remember, we are not getting too excited. We want to wait for further confirmation to happen, which is likely going to come in the form of a retest of the structure. And so if we have a retest of structure followed by selling pressure around this area, then we want to join the decline to the downside. And for those who are already in this trade, if a breakdown retest of the structure happens and we start seeing selling pressure, we want to add more position to our existing trade. So this is how we intend to look at the US oil for the New York session today. Now, remember I told you we had this bullish trend line during the we started last week after connecting the series of higher lows. Here we had this bullish trend line, which was finally broken at the early hours of this week. Well, I told you that this bullish trend line will be guiding our bullish momentum, and since price has continued to trade right below that structure, we continue to hold on to our bearish momentum at this point. So remember I told you at the beginning of the week that we're expecting a bullish momentum which might incite the second wave of that bullish momentum that started a couple of weeks ago. So at this point in time, as prices continue to trade right below the $86 level, all bullish buyers or all bullish expectation will be, I think at this point in time, we just have to hold on to any bullish momentum here and let's see how the selling momentum is going to go. So for us to buy the US oil, we want to see an outright breakout of the $86 level, taking out all the sell pressure, all the sell position are right around the $86 level here, after which a retest of that structure will be giving us a confirmation of a trend continuation. So the retest of the $86 level could happen, or the retest of the bullish trend line here to give us a situation of a trend continuation to the upside. So that is how we want to see the US oil for this week. So for the US oil, the position we have here, we have a sell position running. We have moved our stop loss to break even or lock in some profit at this point. And what I said is that we'll wait for a breakdown of this temporary demand zone between the $82.50 area and the $83 area to look out for another opportunity to add more position to this existing trade. So that is that on the US oil. If you have any questions and you think there is somewhere you need me to make further clarification, feel free to drop in your inquiries in the comment section and I will be willing to be of help in that regard. So I'll be taking the next 10 to 15 seconds to read through the chat and see if there are any questions. And if there are none, we'll definitely move on to the next pair. So what do we have here in the chat? So we have okay, 359, good morning. Okay. All right. So in the absence of no question, I guess we move on to the next pair. So the next pair we are going to be looking at is definitely the US tech. Sorry, excuse me. So on the US tech, what do we have here? Well, as at yesterday, I told you how I'm already in a buy position on this one. Hold on a second, give me a moment, please. Let me quickly sort this technical issue out. Hold on a second. Sorry, I'm with you. I'm just trying to sort out okay. So what we saw here on the US tech was a situation where we saw a bullish momentum that started weak. And the first thing we observed here was that price has been caught within a channel between the $11,500 and the $11,250 area. And I told you yesterday I took advantage of this retest of structure. So we saw a breakout of the structure. Price tested 11,500, came back into the 11,250, and I took advantage of this bullish move to the upside. And as at yesterday, I told you that if you are joined this, let's see how price action move. And if price action comes back to do a retest of structure, we want to add more position to this existing trade. Now that we are in this position right now, and at this point in time, we're in profit. If you are taking advantage of that move yesterday, kudos to you for being on standby to take advantage of that move. And at this point, you will be running with about, let me see how many pips in profit at this point, about 150 pips in profit. So the next thing I'll be advising us to do here is to move our stop loss to lock in some profit, maybe somewhere right above the $11,250 area, as we can see what has been happening in the last 24 hours, as we see selling pressure right above the 11,500 area. So this selling pressure is more or less a sign that sellers are in this market at this point. So we want to be mindful of how we want to be taking advantage of any bullish momentum here. So with the current structure we have here, what we are going to be looking forward to is price breaking out of the 11,500 area to give us a further confirmation that the buyers are very strong at this point in the market. So if a breakout of the structure happens, remember, we don't want to get too excited. We want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of that structure, after which buying pressure on lower time frame right above the 11,500 area will be giving us a leverage to join the bullish potential. Then, in addition to that setup I just shared with you now, there is another possibility that could happen here. Let me zoom out into, let me zoom out so that we can see what I'm talking about here. Let's go to the 2 hours time frame so that we can see things more clearly. So here on the 2 hours time frame, look at what we have here. So as at the live session, during the live session yesterday, we identified this bullish trend line after connecting the series of higher lows here. So we had this bullish trend line running, and at the same time we had that buy zone around this area, and we said if price at any time comes within that buy zone, we want to be looking for buying pressure, which price might likely evolve into a reversal pattern, breakout, retest of structure. Then we could join the potential bullish rally, but price has yet to come into that level. And since we've been witnessing selling pressure, excuse me, excuse me. So we have selling pressure here. Excuse me. So we've been witnessing selling pressure around here since the beginning of the week, right below the 11,500. This selling pressure might lead into a situation where price might turn out to be, the structure might turn out to be a reversal pattern, resulting into the retracement phase of this impulsive move that we saw here. So if that happens, then we want to see price come back into the buy zone here, which also lines up with that bullish trend line after which we want to be looking out for reversal patterns to join the potential rally to the upside. So the bullish trend line here continues to be our yardstick for trading opportunities for this week. So we want to use that bullish trend line as a yardstick for buying momentum. As if price continue to respect that bullish trend line, we want to be looking forward to buying opportunities. And if a breakdown of that bullish trend line happens, we want to see that as a bearish signal. And remember, we want to wait for price action to do a retest of structure before we want to join the decline to the downside. But at this point in time, we're still looking at a bullish momentum here. So we have two situations here that we are looking forward to. The first one is a breakout of the $11,500 level, retest of structure to add more position to our existing trade. And if you are not yet in this trade, this is an opportunity to join when we cite a breakout retest of the $11,500 level. Now, if price continues to the downside, the other situation is price comes to the downside here, respecting that bullish trend line or coming within the buy zone we have here, then a reversal pattern here, a double bottom structure or a inverse head and shoulder pattern, whatever it is, a retest of structure, breakout retest of structure will give us a confirmation to join the rally to the upside. So that is how we want to trade the US tech for this week. If you have any questions, feel free to drop in your inquiries in the comment section and I will be willing to be of help. Okay, 425 talking from Nepal. All right, you are welcome on board. All right, just stay tuned in and you get to understand how things work here. Okay. So the next pair we are going to be looking at today is the XAUUSD, and on the XAUUSD we continue to remain patient on this pair. So before I go into the details of what is really happening here, let's scale up to the daily time frame and let's see what is really happening and how we got to this point in the market where we are looking forward to buying opportunity. So when we scale up to the daily time frame, what is the first thing we will observe here? So obviously the first thing we observe here is that price action has been on a bearish momentum since the beginning of the year, and as a result of this we were able to connect the series of lower highs here to give us that resultant bearish trend line. And as you can see, price has consistently respected that bearish trend line. Now the next thing we observed was this very important key level at the $1,680 mark. Look at what has been happening here since the month of July. We saw how this $1,680 level has been a major determinant of price action. So I want to show you how that is. Look at what happened here in the month of July. We saw as soon as price got into the $1,680 level, we saw buying pressure. And if we fast forward into the month of September, though we saw buying attempts around this area, but it was quickly met with strong resistance from the sellers, as we saw how the sellers push price right below the key level here, breaking down the key level, and throughout the month of September, price has been trading right below the $1,680, emphasizing the strength of the sellers at this point in the market. However, during the early days of this month, we saw a breakout of that structure with engulfing candle, but as you can see, price came back into the bearish trend line, respecting the bearish trend line one more time, hereby pushing price to the downside, breaking down the $1,680 level, and since then price has been trading right below the $1,680 area. So this is more or less a sign that the sellers are really very strong in this market. So the first thought that will come to our mind is that we want to be looking forward to selling opportunities on the XAUUSD. However, if we zoom further into the current structure and look at what has been happening here since the month of September, I think the later part of the month of September, we have an interesting structure around here. Even though price has been finding bearish momentum, we saw that as soon as price got into this $1,620 level, we saw buying pressure from this area, which took price right back into the into the bearish trend line. And immediately the bearish trend line was rejected again, we saw price come back into the $1,620 level during the course of last week trading session, and what happened afterward was quite interesting as we saw another buying pressure around this level, which led into this impulsive engulfing candle that took price right out of that structure. So what with the signs we saw here, what does it tell you? It tells us that this level appears to be a strong demand zone, and it has been opposing all selling pressure in the last 1 month. So we want to be mindful of how we take advantage of any selling opportunity around this area. And with followed by an engulfing candle rise from the structure, it's definitely a sign that buyers are still very strong at this point in the market. And if we are thinking of selling the XAUUSD, I want to see a bearish signal, that is a breakdown of this demand zone in such a way that price takes out all the sell buy position here, to give me that bearish signal. And remember, when this happens, we are not getting too excited, as we want to be patient enough to wait for price action to give us a confirmation, which is likely going to come in the form of a retest of that structure. So what's happening here? So if we see a retest of structure, then we want to be looking forward to selling pressure on lower time frame to join the decline to the downside. But if a breakdown of the structure does not happen, I'm thinking that we should continue to look forward for buying pressure. So in order to look for what is really happening here, we want to scale down to a much lower time frame to see what has really been happening right above this demand zone we just identified now. So scaling down to the 4 hours time frame, what do we see? So right on the 4 hours time frame here, the first thing we observe here is that as we can see here, hold on a second. As we can see here, price broke down this key level at the 1,680, and since then price has been respecting this bearish trend line the last 2 weeks now. And as soon as price got into the demand zone we identified on the daily time frame, we saw something that looks more like a reversal pattern in the form of a double bottom structure, which led into the breakout of that structure. And from a technical standpoint, whenever we have a double bottom structure like this, which is a reversal pattern, the next thing we want to be doing is to identify a neckline area, which we'll be using as our trading guide. Now we had a neckline at the $1,640 level, and followed by a breakout of that structure. That is a bullish signal. We saw the breakout of the structure. So the next thing we should be expecting is that price should come back and do a retest of that structure, after which we look out for patterns on lower time frame that supports a trend continuation to the upside to join the potential rally. So since the beginning of the week, we have been witnessing selling pressure, and it appears price is back at the neckline area right now. So how far will this retracement phase go is the next question we should be asking. So are we going to be seeing buying pressure right from this area during the New York session today? That is buying pressure here, multiple rejection of this level by buyers that will be pushing price to the upside. Or are we going to be having a situation where price is likely going to come back and retest that structure, that bearish trend that was broken, so maybe somewhere around here, to incite that next wave of that bullish momentum? So these are the scenarios we want to be looking forward to during the New York session today. And in order to make our job easier, what I did here was to take into consideration this impulsive move, and let's use it to identify a buy zone. And the only way we can do that is to project when this retracement phase is going to end. And we are going to be projecting somewhere within our golden zone area, which is between the 50 and the 78.6% of the previous impulse leg. And when we bring out our Fibonacci retracement tool and run it through that impulse leg, we had the between the 50 and the 78.6%, which is right between the 1,640 and the $1,630 area as our buy zone. So we have a buy zone here, and price is right within the buy zone. So it is advisable that we'll still remain very patient here and look out for how participant is going to relate to the structure. So what we want to be looking forward to buy the gold right now is to see reversal patterns here. We could see probably a retest of the structure evolving into a reversal pattern, breakout retest on lower time frame, then we could join the rally to the upside. So if this happens accordingly, that we start seeing bullish momentum here, where will our take profit target be? like I said yesterday, our take profit target is not going to exceed the $1,680 mark. And the reason why we said that is simply because of how important that level is in the past. And we can see we've been witnessing selling pressure as soon as price broke down that level in the past as well. So we want to wait and see how price action is going to relate to the structure. And if you look closely into the structure, you can see the structure also lines up exactly with the bearish trend line we identified on the daily time frame. So we want to see how price is going to relate to the structure. Will it turn out to be a situation where sellers will come in after a reversal pattern happens to push price to the downside? Or are we going to be having a breakout of that structure to incite a bullish continuation? After which we want to be adding more position to our existing trade. So time will tell on this one. So in that regard, let's have our take profit target around that area, which will be dovetailing to how many pips that is, somewhere between 3,500 pips to a maximum of around 4,400 pips to catch here. So let's see how price action plays out in the next 24 hours on the XAUUSD. Like I said, patience is required here. Let's be patient enough to wait for structure to line up in that favor. Now, if we don't have a reversal pattern here, that is, we don't have reversal pattern here, and we start seeing a situation where price breaks down that demand, that trend line that was broken, then we want to see this as a signal that there might be a sell momentum here, and then we wait for a retest of the structure with selling pressure right below the $1,640 level to join the decline to the downside. So that is the only way we want to be selling the XAUUSD using the current structure in this market right now. If you have any question, let me know in the comment section, and let's see how I can make things more easier for you. If what I've explained so far is still very looks ambiguous to you anyway. So okay, so if you have any question, feel free to drop it in the comment section. I'll be moving on to the next pair, and I will make sure I look into the comment section to see if there are any questions whatsoever in that regard. So moving on, the next pair we're going to be looking at is the XAGUSD, and we have a similar scenario on the with what we have on the XAUUSD as well. And what we have here on the XAUUSD, let me quickly run through an holistic perspective on this, and let's see what our expectations were at the beginning of the week, and then we look at what our expectation is going to be for the New York session today. So on the daily time frame, the first thing I was able to observe here, in fact, I had three structures that I'm going to be explaining to you in a moment. And the first structure is this bearish trend line that I was able to identify after connecting the series of lower highs here. Though we had a breakout of that structure, the price came back right below that bearish trend line during the month of April this year, and since then price has been trading right below that bearish trend line. Now the second structure I was able to identify here is this descending channel, and after connecting the series of lower lows and lower highs, we had this descending channel mapped out. So we had a breakout, price came back, lower low, lower high, lower low, and lower high, lower low one more time, and then we had the lower high here, though we had a breakout of that descending channel during the month of September stroke the early days of the month of October to give us a bullish signal. But as soon as price got into that bearish trend line, we saw a sharp rejection by the sellers to push price to the downside. Now, the last structure I was able to identify is this $21 mark, and look at what has been happening here since the month of May. We can see that since the breakdown of that $21 mark, price has been trading right below that level. So every time price comes back into this level, buying pressure comes in, sellers reject any buying pressure and push price to the downside. So this is a very key level that we also want to take into consideration. Now, with this current structure we have here, and we have identified that price has been going on a downtrend since the beginning of the year. But one thing that caught my attention here is this demand zone that I was able to identify around the $11 mark. And why is that so? Look at what happened as soon as price comes into this level. we started seeing buying pressure from that area. The same thing happened in the month of September, and the same thing also happened during the later part of the month of September, and even throughout the course of last week trading session, we saw buying pressure right from that area. So what this simply tells us is that there is a strength of buying power around this area, so we need to be very mindful of jumping into any selling momentum at this point in time. So what we wanted to do next is to identify what is really happening right around here, what happened throughout the course of last week trading session as we saw multiple rejection of that level by the buyers. So in order to have a better perspective into this, we scaled down to the 4 hours time frame, and what we saw on the 4 hours time frame was quite interesting as we were able to identify a reversal pattern around this area. So we saw multiple rejection of that buy zone, which we identified on the daily time frame, and we all know that after identifying a reversal pattern like this, the next thing we want to be doing is to identify a neckline that we shall be using to guide our actions. And that is why we had this $18.90 level, which has a tendency of selling pressure in the past. And what we saw during the later part of last week trading session was a significant breakout of that structure. So a breakout of the neckline, obviously we expect that price will come back, do a retest of that structure, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the upside. And in the last 24 hours on this pair, we can see we have been witnessing bear selling pressure. Price has continued to climb to the downside, and right now we are within the buy zone we identified yesterday. So the next thing we want to be looking forward to at this point is to see how participants is going to relate to this price. That is the price between the $18.90 area and the $18.50 area. So is this area going to be a level that's going to be cheap enough to buy the silver? So if that is going to be, we want to see a reversal pattern, breakout retest to structure on lower time frame to join the rally to the upside. So that is the scenario we want to be seeing here. However, if a situation happens that price breaks down and then price comes back here and we start seeing selling pressure right below the $18.90 level, or sharp rejection, or patterns on lower time frame, maybe on your 10 minutes time frame, 5 minutes time frame, giving us signals that there is tendency of selling pressure here, then we want to be swift enough to get ourselves prepared to sell the XAGUSD with a take profit target right within the demand zone here. So that is how we want to trade this during the New York session today. So it's important I state here that we need to be very careful, very patient to wait for structures to line up in our favor before we want to be joining whatever potential rally or decline that will be happening at this point in the market. So that is that on the XAGUSD. So let's put on our patient cap and wait for price action to evolve in our direction. So if you have questions, feel free to drop in your inquiries in the comment section as usual, and let's move on to the next pair. So the next pair I'm going to be looking at now is the, what's it called, the USDCAD. So on the USDCAD, what did we see here on the daily time frame that made us made the decision we made at the early hours of this week? So the first thing we observe here on the daily time frame was that the USDCAD has been on a strong bullish momentum. But what caught our attention is the structure at around the $1.32 level. Look at what happened here in the month of July. We saw selling pressure here. We saw selling pressure here before we finally saw the breakout of that structure during the mid-month of September. And from a technical standpoint, whenever we have a breakout of the structure, we expect that price is still likely going to come back, do a retest of structure to incite a trend continuation to the upside. But since the breakout of the structure, price has continued to climb. Price has continued to climb to the upside, and we saw a situation as soon as price got into the 1.400 level, we started seeing selling pressure around this area. And this selling pressure here tells us one thing, that this might likely turn out to be a reversal pattern, which will incite a retracement of that impulse leg that we saw here. So remember, we had this impulsive move that led to the breakout of that structure we identified at the 1.32. We might be looking forward to a retracement of that impulse leg before that trend continuation to the upside happens. So that is a speculation we are looking forward to. So in order to understand what is really going on here, we want to scale down to the lower time frame to see what is really going at this point in time, and then decide if we are going to be selling the USD card or we are going to be buying it going forward. Now, before I go to the lower time frame, another thing I want to share with you here is this trend line I was able to identify here after connecting the series of higher lows. So we saw our price respected the structure here, though it broke down the structure here. There was a little rejection of this level. Then we saw finally price broke out of that structure during the later part of the month of September, and since then price has continued to respect that structure. So again, during the course of yesterday's trading session, we saw another rejection of that level. So now with that scenario we have here, we have two things we want to be looking forward to. The first scenario is that is price going to be respecting this bullish trend line to push price to the upside one more time? That is one scenario. Or are we going to be having a breakdown of that trend line to incite a bearish move, that is a retracement of that impulse leg, after which a retest of structure happens, will lead price back into the structure before we start looking for buying position. So that is the two scenarios we want to be looking at. To get things more clearer, we'll scale down to a much lower time frame. So we scale down to the 4 hours time frame, and on the 4 hours time frame, what did we see on the 4 hours time frame? Well, the first thing we were able to observe here is the supply zone around the 1.39 1.400 level. And what we will observe here is that as soon as price got into this region, we started seeing selling pressure from this area to give us a clue of how strong the sellers are at this point in the market. Now, the next thing I was able to do here was to identify this key level at the 1.37. As you can see how this level held buying pressure at one point in time. Then we saw the breakdown, a little breakdown of that structure. Price came back up again. Then during the later part of last week, we saw this engulfing candle that broke down that structure. So in order to make things easier, we identified the 1.37 area, which will be serving as our yardstick. And I said if price breaks down, retests the structure, we want to be selling the USD card. Now look at the scenario we have here. So we have the breakdown of the 1.37 here, though price respected that bullish trend line we identified on the daily time frame, and price has climbed up. So I was able to identify the sell window where I said we want to look forward to reversal pattern here that will be sending price to the downside, and if a breakdown of 1.37 happen, retest of structure, we want to be adding more position to our existing trade here. So that's how we want to be looking for selling opportunities here. However, how do we know if a buy momentum is coming in, considering the fact that we have this bullish trend line identified here that has been respected since in the last 2 months? Now we saw how this bullish trend line has been respected. Well, what I'll be saying here is that I want to see price break out of this bearish trend line. Remember, we identified this bearish trend line yesterday. Hold on a second. So we identified this bearish trend line yesterday. So we want to see price break out of that structure to give us a bullish signal. And if price breaks out of that structure, we want to remain patient to wait for a retest to structure in the form of a reversal pattern right at this area before we want to be joining the rally to the upside. But if that does not happen, I want us to be looking at below this B1.37 for selling opportunities on this one. And to make it more assuring, a breakdown of that bullish trend line will be okay to look out for. Then a retest of structure, then we join the decline to the downside with our take profit target sitting right around the 1.32 level that was broken during the course of the trading session last month. So let's see how this is going to play out. So I'm still looking forward to my take profit target here, and we look out for buying opportunity once price comes within this area, as price action has been monitored at this point. So that is that on the USD card. Let's see how this plays out in the next 24 hours, and I hope we'll be on standby to take advantage of this move when it finally happens. Okay, so let's move on to the next pair, and the next pair we are going to be looking at is let me see what that is. So the next pair we are going to be looking at is the GBPUSD. I think is going to be our last pair for today. And on the GBPUSD, what do we have on the GBPUSD? Okay, let's quickly run through what our expectations were yesterday and then come back to. So like I told you here yesterday, on the daily time frame, we have a bearish momentum and we were able to connect the series of lower highs here to give us that resultant bearish trend line after connecting the series of lower highs here. But that is not the most important structure I want to show you here on the daily time frame. The most important structure here is the 1.1400 level. And if we look at this 1.1400 level, look at what has been happening here since the month of September. Though we had buying pressure from this area during the month of September, which lasted about 2 to 3 weeks, which led to a final breakdown of that structure here. And as soon as price broke down that structure, the next thing we were thinking of from a technical standpoint is that price is likely going to come back and do a retest of that structure, which is exactly what happened. Price came back into the 1.1400 level, did a retest of that structure, but it appears that the selling momentum wasn't that strong enough to break down the previous low. So we had the sell momentum culminate here. Price came back again to the upside. From this level, we saw bullish momentum. And as soon as price got into the 1.14 again during the course of last week's trading session, we saw multiple rejection of that level as well. And what this tells us is that the sellers are very strong at this point in the market. But one thing that caught my attention is this higher lows that we have here. We saw how price has continued to find higher lows. And as a result of that, we were able to identify this temporary bullish trend line to guide our action for this week. So is this bullish trend line going to incite a bullish momentum? Well, though we had rejection of this level, it is not advisable to be buying right from this point, considering the fact that we have a very strong selling niche for participants in this market at around the 1.1400 level. So what we want to be looking forward to buy the GBP USD is a significant breakout of the 1.1400 level. That is, price breaks out of that structure, taking out all the sell position here to give us a bullish signal. And remember, we are not getting too excited at the sight of such a signal. We want to wait for price action to give us further confirmation, which is likely going to come in the form of a retest of that structure. That is the 1.1400 level, which also lines up exactly with that bullish trend line. Then we look out for patterns on lower time frame that will support a trend continuation. And this pattern could be your double bottom structure, it could be your inverse head and shoulder pattern, or whatever reversal pattern that is to join the potential rally to the upside. So that is the bullish expectation we want to be looking out for if we are going to be buying the GBP USD. However, when we scale down to a much lower time frame, we begin to see things more clearly, as in we want to see how participants in this market are actually going to be relating to the 1.1400 level during the early hours of this new week. So when we scale down to the 1 hour time frame and look at how participants in this market are relating to this current structure, what did we notice here? Though we had a bullish gap at the beginning of the week, we had a bullish gap. Remember, I showed you this. We had a bullish gap here. I don't know what's wrong with my mouse. So we had a bullish gap here. And as soon as price got into the 1.1400 level again, at the beginning of the week, we started seeing selling pressure from that area, which pushed price right back into the 1.13 level. We saw another attempt by buyers to push price up, but was unable to break above the previous high here, which resulted into a reversal pattern in the form of a double top structure. Let me show you what I mean by the double top structure here. We saw this impulsive move, saw the first touch, price came back, found lower high, and then we saw the breakdown of the neckline. That's the double top structure. Breakdown of the neckline, we saw the retest of the neckline at the 1.3 area, and price has been oscillating right around the neckline area at the $1.13 level. So we are in a little loss on the GBPUSD at this point in time. If you are taking advantage of the breakdown retest of the structure, so we'll be in a loss of about, let me see how many pips that is. That's about 16, 15 pips thereabout on this one right now. Now, with this current structure we have here, how do we intend to trade this going into the New York session? Well, I still want to tend towards selling right below the 1.13 area. So if you are not in this trade, you could still wait for price come down below this level, or wait for a situation where price breaks down the structure, retest of the structure to join the decline to the downside. So what structure am I talking about here? Look at what I have here. We have multiple rejection of this level by buyers since the beginning of the week at around the 1.12750 level. So if we see a breakdown of the structure, retest of that structure, then we want to be joining the decline to the downside at the site of selling pressure at this point. But if price continue to go to the upside and we are taken out of this running position here, and price leads into the breakout of the 1.14 area, then we want to be seeing that as a bullish signal, after which a retest of structure with buying pressure above that level will be giving us a confirmation to join the rally to the upside. So on the GBPUSD, we have an open position running at this point, but we want to wait for this position to run out. If we are going to be taken out of this position in a loss, it's okay. Let's see if price is going to break above the 1.14 area, and if that happens, then we shift our buyers to a bullish perspective at a breakout retest of the 1.14. But if price continues to trade right below the 1.13 area, we have a breakdown retest of the structure, then we want to be holding on to our sell position here on the GBP USD. So that is that on the GBP USD, and I think on that note I'm going to be calling it a day. But before I do, let's do a recap of what we have talked about so far since the beginning of the session, especially for those who missed out of the beginning of the session. So what do we have here? And okay, I saw Innocent's babe chat. All right, I'm glad you found it clear enough. And then well, this week is starting on a very slow note. It's very slow this week. So at this point in time, the tendency to fall for our compulsions to trade is very, very high. So we really need to be very, very careful and wait for the setups to mature before we want to take advantage of any trading opportunity on the pairs we have been monitoring since the beginning of the week. So we need to be very, very careful. The tendency to fall for our compulsions are very high at this point, as we can see the Monday, Tuesday, we are yet to get in tune with a momentum yet. So let's wait for the structures to line up for us very well before we move in. So let's do a recap of what we have talked about so far. So the first pair we talked about for today is the US oil, and on the US oil we're already in profit on the US oil as price has continued to trade below the $84.50 level. And the first thing I was able to tell you here is to move your stop loss to lock in some profit. You could move your stop loss to break even or lock in some profit at this point. And for those who had missed out on this opportunity that we took advantage of at the beginning of the week, what I suggested that we do here is to remain patient and wait for price action to break down the $82.50 level. And the reason why I said that is simply because look at what has been happening here in the last 24 hours. We have been seeing buying pressure from this level. So we want to see a significant breakdown of that structure to give us a signal that sellers are still very strong in this market, after which a retest of structure will give us a confirmation to join the decline to the downside. So that is that for the US oil. And I told you that we are not going to be buying the US oil unless we see price break above the $86 mark. Remember, we have the $86 mark here, which is a very significant key level that we identified on the daily time frame. So we want to see price break above that $86 level mark to give us a signal that there is a bullish signal. And if that happens, we remain patient for price to give us further confirmation in the form of a retest of the key level at the $86 mark or the bullish trend line here to join the rally to the upside. So that is how we want to trade the US oil spot. So if price continues to the upside, breaks above the $86 level, we look forward to selling opportunity. And if price breaks down the $80.50, breaks above the $86 mark, we look for buying opportunity. And if price breaks down the $82.50 level here, we look forward to adding more position to our existing trade on the US oil. Then we moved on to talk about the US tech, where we're already in a buy position here since yesterday, and we are running with about 150 pips in profit at this point in time. And the first thing I told you here is to lock in some profit, as we don't want to get caught out in any sudden pullback that is likely going to be happening here. And for those who missed out on this trade, we took advantage here yesterday. I told you that we might be looking forward to a situation where price breaks out of the $11,500, and if that happens, we remain patient for price to do a retest of structure, then we could actually join the trend continuation from that level. Then I also painted another scenario where, should this happen, which I'm not sure it will happen, but if it happens, we want to get ourselves prepared for it. That is, price comes back down, takes us out of our break-even position, and then comes right back into the buy zone area, which also lines up with that bullish trend line. Then we look out for patterns on lower time frame, like a double bottom structure, reversal pattern, whatever it is, to join the trend continuation to the upside. The reason why we are taking into consideration this possible situation where price will come back into the buy zone is simply because of how price has been relating to the 11,500 level in the last 24 hours. As you can see, selling pressure coming in from that area, and this could likely push price to the downside in such a way that price comes back into the buy zone here, which also lines up with our bullish trend line. So that is why I said we should move our stop loss to break even, lock in some profit, so that we don't get caught up in any sudden pullback that could happen here. So that is that on the US tech. And then the next pair we went on to talk about is the XAUUSD. And since the beginning of the week, we have been witnessing selling pressure. And one thing that caught my attention was this multiple rejection of the buy zone, of this demand zone that we identified on the daily time frame. Let me show you one more time. So we had this demand zone on the higher time frame, though we are on a very strong bearish momentum since the beginning of the year, but the rejection of the $1,620 area here is something that we need to take into consideration. As we can see, we had a rejection here in the month of September. The same thing happened during the course of last week, as we saw multiple rejection by the buyers at this point. So we want to be looking forward to and look at what happened after the multiple rejection here. It led into this engulfing candle, bullish candle, that took price right out of that structure. So at this point in time, I don't want to be selling unless I see price break down this demand zone, retest of structure. Then I could be thinking of selling the XAU USD. Now, because of the multiple rejection we identify here, we scale down to the 4 hours time frame to look at what is really happening around that area. And when we scale down to the 4 hours time frame, what we observed here was quite interesting, as we were able to see this double bottom structure, and we identified the neckline at the $1,640 level. And during the course of last week's trading session, we saw the breakout of that neckline to give us a confirmed reversal pattern. And with that reversal pattern confirmed, we expect that price will come back and do a retest of that structure. So we're expecting price to come back into the neckline, which has already happened right now. So I have advised that we remain patient to wait for this price action to evolve into a reversal pattern to give us a confirmation to join the bullish potential opportunity here. So when we look at what is happening on the 1 hour time frame, we can see that the last candle here, that is this last candle, closed on the rejective mode. So we want to be patient enough to see how this unfolds. So we are looking forward to a reversal pattern, remember, around this area to take advantage of that bullish momentum. So let's be patient on this one. We could see a situation where price comes back to do a retest of that structure. That is the bearish trend line that was broken last week. Remember, we had this bearish trend line broken last week. So there is a likelihood price might come back here. It's very possible. And if it doesn't, what we are looking forward to is a reversal pattern here to join the rally to the upside. So that is that on the XAUUSD. Then the next pair we talked about is the XAGUSD, which also have a similar scenario with what we have on the XAUUSD, that is the gold. Now, we had this impulsive move last week, breaking out of the neckline of that reversal pattern we identified earlier, and we identified this buy zone and the neckline area at $18.90 area, where I said price coming back into the structure will be giving us an opportunity to join the bullish potential if we see a reversal pattern around this area. And we begin to see signs of rejection of this buy zone. So let's see how this plays out in the next couple of hours. And if it happens, a breakout retest of structure on our lower time frame will give us a confirmation to join the buy opportunity on the XAGUSD. Then we went on to talk about the USDCAD, where we are still expecting the sell momentum to happen here. And though we have a situation where price is still trading right above the 1.37 level, let me show you. So we have the 1.37 level here, which I said is going to be our yardstick for this week. We want to look forward to selling right below that level. And then we also have this bearish trend line as well after connecting the series of lower highs here to give us that resultant bearish trend line. So we want to see how price is going to relate with that bearish trend line. If price comes back into that bearish trend line, which falls within the sell window we identified here, and then we start seeing rejection of that level or probably a reversal pattern there, then a breakdown retest of structure will give us a confirmation to join the decline to the downside. That is one scenario we're looking forward to. And if this turns out to be a bullish setup, then we want to wait for price to break out of that bearish trend line, give us a bullish signal. Then we'll remain patient and see if we are going to be having a retest of structure that will evolve into a reversal pattern that will be supporting a trend continuation to the upside. So these are the two scenarios we are looking forward to on the USD card. So we need to be very patient on this one too as well. Then we went on to talk about the GBPUSD, which is the last pair we talked about today. And though we have a sell position running already, though we are in a loss of about 10 pips to 15 pips thereabout at this point in time. And one thing I said here is that the reason why we are selling the GBPUSD, despite expecting a bullish momentum for this week, considering this temporary bullish trend line we were able to identify here. Let me show you the bullish trend line. So we can see what has been happening since last week. I think a couple of weeks ago now, we have been finding higher lows. We have been finding higher lows. And as a result of this, this is more or less a bullish signal. But because of the situation we have at the 1.14 area in the last couple of weeks now, we can see how the 1.14 area has been a strong selling niche for participants in this market. So because of this, we don't want to be buying the GBPUSD yet, as we want to wait for price action to break out of that structure, that is, see a breakout of that 1.14 area. I don't know why my mouse is not working at this time. Let me see why that is. Okay. I don't know why my mouse is not working. So we are looking forward to a breakout of the structure of the 1.14 area, after which a retest of that level will give us a confirmation that we want to be joining the bullish momentum here. But if that does not happen, then we remain patient to wait for. Okay, I think it's my network, I guess. Okay, so we wait for price action to buy. However, when we scale down to the 1 hour time frame, we begin to see a structure that supports a bearish momentum. Hold on a second, let me show you. I don't know what's happening here. Okay, so when we scale down to the 1 hour time frame, we begin to see a structure that looks more like a reversal pattern, as we saw our price rejected the 1.14 during the early hours of this week. Again, one more time to give us a clue that sellers are still very strong at this point in the market. So what I said here was that we saw this reversal pattern, we saw the first touch, price came back, evolved into a double bottom structure. We saw the breakdown of the structure, we took advantage of the retest of the structure, and since now prices come back here. So for those who are not in this trade yet, well, what are we advising us to do is to wait for price breaking down the 1.12 to 650 level, which is here. As you can see, in the last 24 hours, we have been having buying pressure from this area. So we want to see price break down that structure. And if price breaks down, we don't get too excited. We wait for price to come back and do a retest to structure to give us a confirmation by identifying selling pressure on lower time frame. Then we could join the decline to the downside on this one. So that is that on the GBPUSD, and that is the last pair we talked about for today. And I hope I was able to simulate the various scenarios that is likely going to be happening on all the pairs we have been monitoring since the beginning of the week. So let's see what happens in the next 24 hours. Though things look a little bit slow for this week, but it's okay. Let's make sure that we are disciplined enough not to allow our compulsion to control our trading. as we continue to wait for price action to evolve into a setup that we are looking forward to. And also don't forget that whenever we have a signal that is a breakout of a structure, we want to be patient enough to wait for price action to give us further confirmation in the form of a retest of that structure before we want to be joining the potential rally or decline at that point in time. So that is that on this one. I look forward to seeing you tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, same place, Extreme Speed Live, and let's come here again to analyze the financial market, and let's get ourselves prepared for the New York session as usual. Okay, so I wish you best of luck today as usual, and I hope to see you tomorrow on a profitable note. Bye bye.